All right. Today, we are strapping on our boots and grabbing a compass because we're heading into one of the market's most thrilling and, yeah, riskiest territories, small cap funds. This is where the hunt for massive growth happens, but you've got to know the terrain. So, let's get into it.
So, are you that kind of person who's always looking for the next big thing? You know those undiscovered companies with huge potential that fly under the radar of the mainstream market? Well, if that's you, then small caps are probably right up your alley. So what exactly is a small cap fund? Well, officially, it's a fund that invests in companies that are ranked below the top 250 by market value. Basically, you can think of them as the up-and-comers, the smaller, more agile businesses that could one day become giants.
Okay, so you've decided you want to explore this world. Now you hit your first major fork in the road. How are you going to navigate it? And this leads us to the big debate. Do you trust an active manager, an expert guide to lead the way? Or do you take the passive route and just follow an index fund, which is kind of like following a pre-drawn map?
Now, you might find this pretty surprising. A whopping 62% of all the money flowing into small cap funds is actually in those passive, map-following index funds. Seems like most people are just choosing to buy the entire market and call it a day.
But here's what we really need to dig into. In this specific, kind of wild part of the market, is just following the crowd actually a huge missed opportunity? Are people leaving some serious money on the table by not having an expert guide?
To really get this, let's use an analogy. Think of the large cap market, the huge household name companies, as a perfectly organized, brightly lit supermarket. Everything is neatly priced, every item has been analyzed to death by a dozen experts. It's super efficient. The small cap market, though, that's more like a sprawling, chaotic flea market. There are incredible treasures hidden in there for sure, but there's also a ton of junk. It's inefficient, and that's exactly where a skilled explorer can find amazing deals.
And this is why that inefficiency is so important. Active managers might have a serious advantage here for a couple of key reasons. First, way fewer analysts are even looking at these stocks. Second, their potential for growth is often totally underestimated. And third, a lot of these small companies have really complex or just misunderstood businesses that a simple index just can't make sense.
And this image, well, it just nails it. The active fund manager is that explorer with the compass, the one who's actually doing the hard work, digging through the stalls at that chaotic flea market to find the real gems.
But let's be real, this hunt for buried treasure is not for the faint of heart. The chance for incredible rewards in the small cap world comes with, and I mean this, significant risk. There are traps everywhere. Let's start with the treasure, the fun part. When a small company hits it big, the growth is just explosive. As the Economic Times puts it, you can suddenly find multi-baggers in your portfolio. And that just means stocks that multiply your investment over and over again. But now for the trap. The other side of that coin is just as extreme. If one of these smaller, more fragile companies stumbles, it gets severely punished. A stock that looked amazing one day can, almost overnight, become an absolute dud. The stakes couldn't be higher. And this is why the one word you'll always hear with small caps is volatile. The journey can feel like you're on a ship in a massive storm. The ups and downs, especially in the short term, can be gut-wrenching. You really have to be prepared for that kind of ride. Now, that natural volatility got thrown into overdrive recently during what we could call the speculation anomaly. We saw this crazy market rally that wasn't being driven by solid, profitable companies. Oh no, it was fueled by hype, by narrative-driven themes. Think AI, crypto, all those story stocks where solid numbers just didn't seem to matter. And this chart just lays it all out. Look at what did best during that time. Momentum and high beta, which are basically just code for the riskiest, most speculative stuff. They absolutely crushed it. Meanwhile, the factors that disciplined managers actually look for, like quality and profitability, got left in the dust. It was a really tough time to be an investor focused on fundamentals. And what was the result of that weird market phase? Well, only a quarter of active small-cap managers were able to beat their benchmark. And here's the key takeaway. That wasn't necessarily a failure of their skill. It was a sign of a market that was rewarding pure speculation over actual quality. So, all of this brings us to what is maybe the most important question of all. Forget the market for a second. Let's talk about you. With everything we now know, the massive potential rewards and the intense stomach-churning risks, is this expedition actually the right one for you? Let's just cut to the chase. Who is this high-stakes journey really for? Who should even be thinking about packing their bags to go exploring in the world of small caps?
Well, according to the experts, the ideal small-cap investor has 3 key things going for them. First, a long-term mindset. We're not talking a year or 2, we're talking 7 years minimum. Second, a very high tolerance for risk. You just can't freak out when those market storms hit. And third, you need the discipline to stay invested even when it gets rocky. If that doesn't sound like you, this part of the market might not be your map to follow.
So, where do we go from here? As we look out at the horizon, what's the landscape for small caps looking like for the year ahead?
Okay, and a really important note here. This slide shows a couple of the small cap funds that were mentioned in our research, just to give you an idea of what's out there. But let me be crystal clear. This is for context only. It is not a recommendation to buy or sell a single thing. Your journey has to start with your own research, period.
The general feeling out there seems to be a really interesting shift in mood. Analysts are talking about a move away from caution and towards quiet confidence. You know, with inflation cooling off a bit and company earnings looking healthier, the whole environment might be changing.
Which leaves us with this one final massive question. After a wild period where hype was king, is the pendulum about to swing back? As we head into the next year, will that disciplined, quality-focused approach of the active explorers finally win out over the speculative frenzy? The answer to that is going to write the next chapter for every single small-cap investor.
And of course, please remember that this is all for informational purposes. It is not financial advice. You should always do your own homework or talk to a qualified professional before making any investment decisions. Thanks for joining the expedition.